Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Owen Moore, and VP of Growth and Strategy, Margaux from BeWhere Holdings. BeWhere trades on the TSX Venture Exchange under the symbol BEW and also trades on the OTC under BEWFF. The company is currently trading at 39.5 cents with about 87 million shares outstanding, or about a $35 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks, Trevor. Today we get the two for the price of one. Both Owen and Margaux are here with us. Always good to have you guys on, but especially good to have you guys on now after the kind of run we've seen in the share price. You guys have just put out your Q4 numbers, which once again, a nice, solid, profitable year. So we thought it'd be a great time to have you up here to chat with us all, to sort of talk a little bit about 2023, what some of the highlights might have been, and then ideally talk about what you're looking forward to in 2024. But let's start with those, for those that sort of haven't been sort of brought to the story or are still fresh to the story. Maybe refresh everybody's memory and give the new guys an idea of what BeWhere is all about.
Awesome. Thanks, Paul. Thanks, Trevor. Always good to see you guys, and always a pleasure to get together with your group. Maybe I'll just address the share price before I give you a little bit of background. We don't know why the share price is where it is. So that's pretty much the update on that. We haven't had any major marketing in the last 3 or 4 months. But we're going to take it and be happy with it. So I'd like to be able to give you a little bit more insight, but we just don't have it. In terms of what BeWhere does, we're an IoT company. So we design and manufacture cellular-based devices, and they're used for tracking assets. Everything from large 60-foot trailers all the way down to bike share bikes and packages and goods in transit. So that's kind of what we do. We sell devices, and then we provide applications or access to the data. And so our revenue model is quite simple. Make a little bit of money off selling the devices, and the higher margin side of our business is the recurring revenue. So heavily focused on recurring revenue. So with that, if it's okay, Trevor, we'll jump right into the deck and give you a highlight. Typically what we do, and no difference today, is we're going to provide I think I got to share my screen first. That might help. Okay, then. Okay, so this will be a financial update we'll start with, and then Margaux will provide an operational update on the business. We just filed Q4 year-end numbers last Thursday, I believe. So we'll talk about the year-over-year stuff, but we'll also get into the results in Q4 specifically. And then, like I said, Margaux will provide an operational update. She might, run through a couple of the slides that we've presented before, but we're looking forward to sharing some new highlights on the operational update as well. Total revenue for 2023 was just over 12 million, 20% growth year over year. Q4 came in quite a bit stronger. It was closer to 40% growth year over year, but a nice, steady trajectory up and to the right. So we're happy with the 20% growth, but we think we can improve on it going forward. If you look at the quarterly revenue, it was a record for us, 3.2 million. Q4 is usually a tough quarter for us. This year, it wasn't as difficult from a sales perspective. So you can see last year in Q4, we did about 2.3 million, and this year we're all the way up to 3.2 million. So 40% year over year was a good number for us. Earnings margin, one thing that we track very closely is something that's called a rule of 40. It's used primarily in the private equity markets. It's a function of your earnings margin and your revenue growth. And so you add those two numbers together. If it's above 40, you're doing good. If it's below 40, you need to do better. So this quarter, I think it came in at about 53, which is a good, healthy number for a rule of 40. Recurring revenue continues to trend in the right direction. So recurring revenue, I think it was about 38 to 40% of total revenue, came in at about 5 million. That's the high margin side of our business. There is an anomaly, and I'll discuss this more as we go through it. But a couple years ago, we have a project with armored car companies, and part of those projects include a third-party application that we were billing for. It was pass-through revenue, and the client no longer worked with us on that pass-through revenue. It was given directly to the vendor. That didn't work out so well for them, and just within the last couple of weeks, we've taken that back. And so this little dip that you saw back in 2021 really didn't hit our bottom line. It was all pass-through revenue. And so the converse is also true. So while we do squeeze a little bit of margin out of getting it back, it's not a lot of margin, but you are going to see a pretty significant ramp in our recurring revenue as a result. It's not so much in Q1, but a full contribution in Q2. I think we got 1 month of it in Q1, and Q2 is going to be a full complement all 3 months. So we'll see that recurring revenue ramp a little bit, but only a corresponding smaller increase in the margin off of it. If you look at recurring quarterly revenue, nice solid line and predictable, and that's why we like it, high margin and predictable. Came in at about 1.33 million, and obviously that's a record. That's a record, quarter over quarter for the last several quarters. If we look at adjusted EBITDA, I think Q4 represented our 17th consecutive quarter of positive adjusted EBITDA. These are the year-over-year results, and it works out to just under 2 cents a share in earnings. I think 2 cents a share would be about 1.6 million, so we did just shy of 1.4 million, so about 2 cents a share in earnings on the year. If we break that down quarterly, we do get a little bit of variation, but over the year it kind of works itself out to a nice clean trajectory. Q4 is typically a higher expense quarter for us, and it has primarily to do with salaries and wages. So the variable comp for our staff comes in Q4, annual and quarterly bonuses, and so we take in a bit higher expenses. And that trend's going to continue, guys. We probably should look at accruing those bonuses, but we just don't know where they're going to be, and the variable comp is dictated by performance. So it's something that hits us a little bit in Q4 and a little bit in Q1, but in Q2 and Q3 we don't see that higher expense. So if anybody is modeling us, you can kind of take that into account. 3.71 was adjusted. 371,000 was adjusted EBITDA in Q4, which is still a nice, healthy, solid number, despite having the variable comp come through for staff. Okay, gross profit continues to trend in the right direction. Like I said, I think it's about 38 or 40% of total revenue, and continues to ramp nicely for us. There's a couple anomalies or outliers on this slide, but this is sort of our net income. I think we posted our 12th consecutive quarter of positive net income. The two anomalies or the outliers happened in year 2000 and 2022. So you can see some spikes there, and I'll just give a quick explanation. If the anomalies weren't in there, I think it would be a nice smooth line. But in 2020, we had some deferred development costs that we decided to write off. So it was a non-cash based expense, and it pushed the net loss up fairly significantly. Once again, it was non-cash, and it was deferred development costs that we wrote off. Corresponding in 2022, we had a deferred tax asset that we had to take in, and this was the auditors that made this change. And it was because we hadn't taken in that deferred tax asset previously, and we had a history of positive net income. And so to prevent us from having to pay cash for our taxes and use those historic tax losses, they had to take in that tax loss as an asset. and then write it down against profits. We think we probably have about 2 years left, but we are filing SR and ED claims, shred claims, to make sure that we're not going to be in a cash taxable position, hopefully beyond the next 2 years. If we look at our assets, some of the highlights here: cash was up another $500,000 in operating cash. That's despite spending a good chunk of change on our issuer bid, and actually over $1 million in the last 6 months in operating cash generation. So that's a good number. Cash is going up. Inventory numbers, stays relatively same. It went up during COVID, but it's since normalized a little bit, and we expect it to stay in around that level. That only represents about a half a quarter of inventory. So we manage our inventory very closely, and that's to avoid obsolescence and things like that. That deferred tax asset is showing up here. So you can see we took in that deferred tax asset. It boosted the net income, but it gets written down against net income for the subsequent quarter. So currently about $1.2 million left in deferred tax assets before we're in a cash taxable position. But that like I said, we're making some, we're filing some shred claims, and hopefully we can jump that deferred tax asset up a little bit with the shred claims. And why isn't changing? There we go. Quick overview on our capital structure. Market cap at 40 cents a share is just under 35 million. Enterprise value is quite a bit lower than that, though, and that's because we have decent amount of cash and working capital, positive working capital. So enterprise value is about 20 million. There was I believe about 11 or 12 million warrants that expired in the middle of February. So number of warrants outstanding has gone to 0. That included both investor warrants and broker warrants. We ended up using the issuer bid to buy all the broker warrants, and the investor warrants weren't in the money, and they ultimately expired. So we didn't really have a lot of interest in extending those. We felt it was a bit of an overhang on the company, and so those warrants have gone. Good strong cash position and strong working cap as well. There's the number that we've repurchased on the NCIB. So we've repurchased about 1.8 million shares total. But the broker warrants, 2 steps forward, 1 step backwards. The broker warrants actually added to the number of shares outstanding, but we've obviously bought back a lot more than those broker warrants cost us. We bought those broker warrants at about 23 cents. At the time, we didn't know whether it was a good deal, but in hindsight, we're happy with that purchase. Okay, with that, I'll hand it over to Margaux to provide an operational update.
Well, let's talk about the fun stuff. So as a reminder for the new potential investor joining us today, so we have a almost exclusively B2B model. So we sell to resellers. Some of the largest resellers that we have on that slide, so it goes from obviously Bell in Canada, which is the largest carrier here, T-Mobile, AT&T in the US, Medtel, PBSC, and Lyft are actually now one company that work almost exclusively in the bike share world. Trailcon would be potentially one of the largest trailer company in Canada. This is a Bell client. Tena is a large distributor of construction software services and hardware in the US. Brand McNally, if you remember, they used to make Atlas and maps. Now they actually provide fleet management services. And then, a bunch of other mid-size and smaller companies. The markets that we operate are very diverse. It could be transportation, it can be construction, it can be retail. So it's a little bit, historically our largest clients are in the transportation, but as we put out new devices with new feature, we start to expand all markets. And so another example of our business model. So some of the customers, direct, indirect. At the top of the line, those would be example of AT&T end users. So AT&T is a reseller of BeWhere, and then they would sell to transportation companies like National Distributor, Boeing, which is obviously an airplane manufacturer, governments, a lot of governments with AT&T, Bell is the same idea. Bell also has what we call a VAR program. So Bell resells to resellers. So Bell would resell to their own end users. So it is a tier level reselling. Assure Telematics would be an example of a typical reseller relationship like AT&T. And then we have a few customer of choice that we do direct. Usually those are very large deals where there's not much room for a middleman, and they also, they're large enough that they do comply with all requirements for support and development. They are very helpful for us to develop some products based on new requirements to stay ahead of the market. Anything to say on that?
That was perfect.
Okay. So what was fairly new, so to stay ahead of the competition. So historically, we were, I'd like to say that one of the first company in the world to launch LTM, which is the network that we operate compatible devices. So LTM is a subset of LTE. It is a low power wide area network. The investment thesis behind selling asset trackers that operate on that network is the cost, because it is a lower power network. It doesn't consume as much data. Because it doesn't consume as much data, it also allows battery to last a lot longer on the trackers. So you have a smaller footprint device that can be essentially used to track anything, which is very different than what used to be before, the BlackBerries and similar kind of like large asset trackers that operate on 3G or 4G and consume a lot of battery and cost very much. We now come in at a fraction of the price, which is really what pushed our growth because we were one of the first on the market and because we struck relationship really early on with the carriers that wanted to be able to sell more data, and this was a new means to sell subscriptions. So historically, we had, very simply, because we are an engineering-based company, we had our generation 1, and then we had our generation 2. The B-Mini came in as a 3rd generation, and now we are in the 4th generation, which officially launched in the beginning of the year. And to give an example of what I'm talking about, just to talk about the hardware differences a little bit. Sorry, I'm not very organized. So this was historically our bestseller, which is a solar tracker about the size of the palm of my hand. This can go on a trailer. It's a 5-minute install, and then it tracks the trailer every 15 minutes when it's moving. It is still a very good device, but based on some requirements of our largest customer, we decided to improve the hardware. And also, as the technology evolves, there is more components now available on the market. So we were able to add a lot of things on the device while keeping the cost in check, because the goal is still to remain at a lower value on the market, so it's more affordable, so people buy more. So it is a mass play. So the difference, so this is our generation 2, and now this is our generation 4. So the B-Sol Plus, very exciting marketing. So bigger battery, about twice as much as we had on this one, which means that you can ping or follow an asset a lot more often, even when it's very cold outside. We added location services. Historically, we were mostly doing GPS and cell tower location. We added Wi-Fi location services on all of our devices as well, which now allows us to track indoor and outdoor. Obviously, for a solar device, you do want to be indoor. We've got the B-Sol Plus, we've got the B10 Plus, and we got the BeWhere Plus, which were all the 2nd generation. And they all have the same PCB board. What's inside that has the same Wi-Fi. We have a Bluetooth module, so we can expand to do sensors as well. We've got, what else? We have Wi-Fi, that's it. Oh, and the enclosure, importantly, the enclosure is more rugged as well, so it can withstand, power wash, which is a big thing that we encounter with a lot of our customers. And it's resistant, towards the harsh Canadian and some American winters. The B-Mini, I think everybody's familiar with it. We launched it last year. It is a smaller form factor, but it also has all the goodies on the board. And with that, we are starting to do some, a big part of our business as, again, an engineering firm is to do some research and development and to find new means of responding to needs on the market. And sometimes we, especially Owen and Alvin, are really out of the box kind of thinking. And we have some examples that we're going to talk about in a bit. Just the simple basic stuff. So when you have a tracker, you can also use our platform to do tracker management. So you know what assets is on. You can rename it, you can create geozone. This is fairly simple stuff. We also have API, so we can integrate into third-party software. A lot of our customers like Rand McNally or Geotab resellers would need to integrate into the fleet management, their own fleet management software. So we just push the data and we still collect a recurring revenue on that. Those are customers that you are all familiar with. So we're going to talk about something different. And actually, I want to hide this. I don't know how to present it. Paul, I have a question for you.
Sure.
Look at this video and try to think what we're doing.
So this is set up by the engineering team in the office to mimic something that happens in the field. And so we thought we would play this for you and see if you have any wild guesses as to where we're going with this type of thing.
Okay.
So we don't monitor helicopters, if that's any hint.
I want to hear what Paul can come up with.
I have a rough idea. It might have to do with wind.
We win.
You're close though, Paul. It is for a utility, but we're not monitoring the production of energy.
And so what you see on here might be difficult because of the size of the screen, but essentially this is Alex, how do you say in English?
Propeller?
Propeller. And then there's a B-mini on one side of it. And so the B-mini turns along with it. So there's one thing that we have inside the B-mini, which is called an accelerometer. We have it on all of our devices. And accelerometer usually we use it to measure motion, but it can also be used to measure an axis on a different angle. And so that's a project that the team has been working for some time, where essentially by putting a B-mini on a reel of cable, you can measure the length of cable. I don't know what the degree of accuracy is to the decimal, but it's pretty accurate. And you know exactly how much cable you are unreeling, essentially, by just using a little B-mini. And that is particularly because the cost of this cable is quite high, and you don't want to, either overuse it, underuse it, or run out of inventory when you're using those reels. And so the main customer for this project is the utility customer. Wow. And that's it has a use case that there's not a lot of solutions, especially at the cost that we place yourself is available for today.
That's neat. I would never have thought of using something like that for that type of application. That's interesting.
Yeah. So Geoforce is a long-term partner of ours, and they come with requirements. And this one's actually produced an order of about 5,000 units that we just pulled in within the last couple of weeks. So
wow.
You do a little bit of firmware work. There was no hardware work to do, as Margaux mentioned. We leveraged all the components that are inside the device, did a little bit of software on it, and
he makes it sound easy. It's not that easy.
I don't do the work either. So Alvin really does all the.
But yeah, Alvin's done an amazing work.
So what happens when you have smart people? It makes things look easy.
Yeah. I'll take credit for surrounding myself with smart people. How's that?
Me too.
That should be the goal of everybody. Yeah, surround yourself with much smarter people. It makes your life a lot easier.
That's the trick, isn't it?
Exactly.
And then hope they don't catch on.
Yeah, exactly. Yeah.
So that was one project.
Another one.
Yeah. No, it's yours.
You guys know Tena, or if you've been following, Tena has been one of our longest, lovest, I can say that, customers. They're great to deal with. We do a lot of R&D. Again, I have to give the credit to Alvin, who's put a lot of hours in it. They gave us significant, purchase orders over the years. And what we do for them is they also use our devices to track, especially in the construction industry, some of the assets such as, backhoes or tractors. But more recently, we've been working with them, especially with the new board that has a Bluetooth module to integrate with some Bluetooth beacons that they provide us. The Tena puck, which is quite cute. And I have one right here. So you can see that it's about the size of an AirTag. It's essentially, similar to what an AirTag would be. It is a Bluetooth device that connects to our trackers through the Bluetooth module and then sends the data to the Tena platform through our servers. And what they use that to is, so you track the tractor with the Biggie, which is actually all modelized under the Tena design, so it doesn't look like that. And then you can track what's around the back. We've been, up to 800 feet range, I believe, with Bluetooth, 5.2 now. So you can track, much more tools, because obviously you can't put a GPS device on things that are handheld size. So that's when the Bluetooth trackers comes into play. That is a big demand in this market, and it's coming up firstly with Tena and construction because it's the most natural way of the evolution of tracking a big thing and then smaller and smaller things. Bluetooth is not a new technology, but that's a newer way to use it. Anything else?
No, it's great, and it leverages some design work that our partners are doing, so it creates a nice close relationship. The last thing I'll share with the group, and as you guys know, we don't provide guidance. We don't have analyst coverage, so there's not a lot of forward-looking stuff out there on us. We just closed Q1. We're expecting to show sequential progression quarter over quarter for the next couple quarters. Just a couple of weeks ago, the company pulled in, this is in Q2 I'm talking now, but we had our single largest day of orders. We pulled in over 11,000 units in one day. Now, some of the timing was coincidental, but we'll take it. We're actually close to closing our order book for Q2, which is the earliest we've ever closed the order book in our history. And having said we're going to close the order book, that's to encourage people to take product moving into Q3. But if somebody screams and yells and needs product, we're obviously going to deliver it. But the backlog's strong, and the company seems to be progressing in the right direction. So in absence of formal, accurate guidance, guys, that's all I got for you at this stage.
That's perfect. That's perfect. Well, listen, awesome. Appreciate it. I'm going to throw you a couple questions, but remind everybody if listening, if you've got some questions you'd like me to ask the team here, just use your chat function and we'll do so. One thing that stuck out for me in Q4 was that you did see a higher sort of amount of hardware sales in Q4 than some of the other quarters. And I know historically, that's a good sign for future recurring revenue, because typically you're selling this stuff sometimes almost at cost, really, to capture that high end recurring revenue down the road. So I mean, did I get it right?
Yeah, you did. The curveball in there is what I talked about with Brinks and getting that pass-through revenue. So it's going to confound it a little bit. That Brinks contract represents about $1 million a year in additional recurring revenue, albeit at closer to 5% margin than where we're typically at, which is 80 to 85% margin. Sometimes approaching 90% on the recurring. So it will be a little bit confusing. We'll try and do our best as we report those numbers to let everybody know what's being accounted for in it. But yeah, the big hardware quarters turn into higher recurring revenue, and usually somewhere between 30 and 60 days to start seeing that ramp up from units that we sold in the previous quarter.
Now, you just mentioned that you got some sizable sort of new orders and some neat little milestones that you hit. What do you think is the genesis of that? What have you guys done differently, if anything, that's causing these sort of things to start to happen?
It's a good question, and I don't know if we have a good answer. We do know that the overwhelming majority of those new orders are on new product. And so those features that we're now have baked into the new product seems to be well accepted. So that's, I think, contributing. We actually increased pricing a little bit. And specific features, right? The rotation added an order for 5,000 units. The courier company we're working with is getting close to popping for another 3,000 or 4,000 units. What else was made up in that? Fleet Complete came through. Fleet Complete was our first client, and they continue to put in strong orders for us. And then Tena's coming in with big numbers for us as well. And Bell's doing well. AT&T's doing well. Bell, AT&T, and T-Mobile aren't inventory orders. So, those numbers that I was just talking about are for them to replenish their inventories. With Bell, AT&T, and T-Mobile, we handle the direct sales and shipping and logistics to the end users. So you won't see those show up in inventory orders, but they still contribute pretty decently every quarter. So yeah, you know, things.
And we've been but you should give yourself some gratitude. I don't know if I can say that, but we've grown a lot since we started the company, which was in 2016, and it takes. I'm going to be the marketing girl for a second, but it takes time to have a brand.
Sure.
And to have a reputation of reliability, and I think we're starting to see that. Where BeWhere is now, it's a name that is pretty well known in the industry. When you go to asset tracker, we are very lucky to have amazing partners. The big one and the small one, have very positive feedback, and I think it's also the size of the team, but the dedication that we put, the hours that we put in. Supporting our resellers and like being on the lookout for any issue right away. It's often something that gets dismissed if you're not familiar with the industry, but support is extremely important. And the retention of customer or growing relationship with them is because they're happy and they want to deal with you as well. A bit of the soft side that we have to think about as well.
Yeah, no, that makes sense. That makes sense.
Before as well, Paul, we, the move from 0 to 10 million, at least from our experience, has always taken a lot longer to go than from 10 to 20 million.
Sure.
And, part of that is just straight metrics, right? If you can continue to maintain 20% year-over-year growth or more, you're coming from a higher base, which makes it go up quicker. So the team's doing great. I mean, everybody's focused. They're bringing on new partners and doing a great job of supporting those existing distributors. So everything seems to be clicking. We hope you guys continue to pay attention. Q1 and Q2, we're expecting good things going forward, and building for Q3 already.
Yeah, that sounds good. Cash. I mean, you guys have some decent amount of cash starting to build up. What's the plans with cash? Is it more the same, or do you have any new ideas here?
Yeah, I mean, we're, I guess a couple things there. It's not enough cash to do what I want. So we want to continue to build it for a little bit. We do want to convert our business model. If you look at some of the larger telematics companies, they've converted their revenue model so that everything's on a lease, which, it removes the lumps, it removes the spikes in hardware revenue. But it creates a nice, really smooth trajectory. And, a lot of investors don't value the hardware side of our business. And while it's a bit of a shell game, it's an easy thing to do to add a couple dollars a month to the monthly bills and sign them up for a 3-year period and convert it. The problem with that model, and everybody's familiar with that, right? When you buy a phone, you're not spending $1,500. Well, not some people are, but and the carriers have been doing this for a long time. The problem with the model is it takes a lot of capital, right? If we were to convert all our business to that, we think we need about $6 million just to see us through to the point where those monthly cash inflows, make up for that hardware need for that. It's about a year and a half. You're making everything on a 3-year term. The other nice thing about that model is you actually don't reduce your price at the end of the 3 years. So your margin spikes majorly once those 3 years are up, because you're still making that lease component to the monthly fee, but you don't have that cost hitting you anymore. So that's something that we're entertaining. And then obviously we're always interested in M&A. It's something that we've struggled with in the past because we just felt we didn't have the equity in our share price, but that's starting to correct itself a little bit for us as well.
Okay, cool. And then, I mean, you talked about a bunch of different verticals you guys are selling into, but are you seeing any? I think last time we chatted about those rental bikes, and you saw a big opportunity there. Do you see any other industries where there's a growing opportunity that might be bigger than others?
Yeah, and it's, I mean, kind of nuanced a little bit. Like when we take on an R&D project for something like those cable reels, it's because we see an opportunity. Now, it might not be as apparent to people as bike share bikes, because you see them every day when you're walking around the street, and so you're familiar with them. But utilities are a great market, especially the electrical utilities. They're not prone to fluctuations in economy
Cycles,
and
yeah.
all the rest of it. And there's literally hundreds of thousands of those cable reels out there without a tracking solution. So monitor them for anti-theft, right? There's a lot of copper in those. Copper going up, right?
Yeah.
Silver, gold, copper, all the precious metals and non-precious are going up. So theft is an issue. So just being able to monitor them for loss prevention and anti-theft provides them an ROI to justify the price. And then when you tack on accurately monitoring how much inventory is going in the ground, it's all gravy for them. So that's kind of how our product development works. It works by communicating really closely with our partners, understanding their opportunities, and making sure those opportunities are going to turn into something real if we do that work. And we don't always nail it, Paul. I mean, we have a wall of shame in here where we have R&D projects that, you know, we don't like to look at, didn't work out for whatever reason, but, you know, you only need a few of them to hit to generate some decent numbers.
Yeah, no, that's standard in the innovation game. You're not going to win them all. Challenges, any sort of new challenges that you face, or ongoing old ones that
I mean, we're starting to see more competition come into the space that we've been playing in, specifically the low cost asset trackers. And I think that's because we've shown success at it. But I think people are in for a bit of an awakening as they try and get into this market. The only way you can make it work at low price points is if you have low overheads. And you know, Chris and Margaux and Brian and Albin and Rajiv have just done a bang up job in keeping our expenses in line so that we can continue to offer those low price points. Our whole distribution model is based around not paying for salespeople, not paying for, you know, sorry.
That's okay. It's funny.
We'll pay for Margaux.
Except for Margaux, exactly.
It's not paying for a large team underneath Margaux, I guess is what I'm trying to say.
It's he's nailed on. It's actually, I think I had an investor asking me that question not so long ago, particularly about, you know, large companies called Samsara. It's like, how come, you know, you can do better or compete, because their financial numbers are not the greatest. And it's like, well, that's exactly why. It's because, you know, we have a team of 16 people, I think.
We're up to 16, Paul.
16. Which is not much different than when we started, you know, in 2016. We were six, seven, maybe. And we mostly add to, you know, the revenue generating talent. We add to engineering, we add to Q&A, we add to support. Not saying that sales is not revenue generating. Obviously, it's the number one, but it's also helping us make sure that, you know, Brian, Chris, Owen, and I like manage the largest account, which we do it at minimal cost overall. The revenue per employee is pretty good. And it's very hard to compete with the 16 people employee that are selling. So we make profit on every single sale. And then, you know, when you have 500, 2,000 employees and you're trying to sell something that costs $80,
it's
not the same.
You got to sell a lot. You sell a lot,
and under, you know, or subsidize yourself, which is not necessarily always a good thing. So.
No, I mean, that's one thing that's always impressed me. The business model and distribution model and the partners you have, really, they do a lot of heavy lifting for you guys. You guys are great at innovating and getting the product there, but then it's really, you know, some of the big players that are out there really, you know, doing the hard selling for you, which is great. I got a couple questions that have come in. I'm going to try to ask them here. First one is from Russell, who says, and I assume he assumes Tena. What does Tena sell for you, and what is the recurring revenue compared to your other products?
You can head to the Tena website. Actually, they have they call it the Tena Mini. So they have their own enclosure. We provide the assembly with their enclosure, so it's branded Tena. And it's the BeWhere guts inside of it. So it's solar tracker, wire tracker, along with the Bluetooth beacons. And then they're recurring, obviously, because they are a much sizable company. Their recurring would be priced towards the quantity, but it's the same model: hardware sales and a recurring cost of it.
Gotcha. And then Russell asked another question that I always love to ask you, Owen, because you're sort of at the bleeding edge of some of this stuff. But As far as the company R&D that you guys are working on right now, is there something that gets you really excited? Is there anything new and novel that gets you
Yeah,
going?
no, that's a good question, and it takes a lot of our mind sharing here. You know what we're doing. So the latest version that we just spoke about, the version 4 that's getting great traction. We are going to end of life the previous versions, so those SKUs will go away. But one thing that's exciting about, and this kind of excites me because I like screwing up markets. We're going to cut the BOM cost by half and bring out a product that isn't quite as full featured as what we're seeing with the new version 4s, but it's going to come in at a fraction of the cost. So if people are modeling to compete against us at current price points, they're in for a rude awakening. We're going to drop this thing to its knees, and that makes it easier to move to that lease model, especially for those new products, because the costs are so low. Now, if it's as successful as we think it'll be, we're going to sell a boatload of them, and we're going to have a lot of leases out there on it. So and you'll see that both for solar and it's going to be a consolidated SKU. So it's going to do solar. It's going to act like the mini, so it'll accept external power. So it's kind of a combination of all 3 products, which with a much lower price point and a really cool, tiny little form factor. And the biggest thing is the price is going to come way down on it.
Are you able to give us a sense of what the cost is likely to be? I mean, so much of what you're going to track is based on the cost, right? So what kind of numbers are we talking about here?
Yeah, so our current SKUs, are anywhere between 50 and $80 in that range.
In US.
In US dollars. We're going to come in less than half of that.
Oh, right on. It'll be a lot of things that make it worthwhile tracking at that point. Okay, we do have a couple more questions, and then we'll wrap it up here. When do you expect to drop this new product?
The low BOM cost product. We're in the prototyping stage right now. You're probably looking at 9 months. 9 months. Then an extra 3 months to get through all the certification BS.
Yeah. So we'll call it a year. Yeah. And then last question, do you sell outside of North America? Do you sell any products outside? You do, right?
Margaux can answer that one.
We sell a lot in Europe, actually, particularly through our bike share program, because it's obviously more a European thing. I know. Oh, well, yes. Okay.
Or not.
It was a project. So last summer I was in London for not only family business but also business, and we did nail a new city, and so it's a fairly large deployment. It's also very techy. So there's a lot of requirements that have been brought by the customer that we're working with a partner that will bring some of the things that Owen has been talking in the past about, anything that's EV communication from a device. So, battery level, speed level, limit of speed, etc. So this is one of our R&D projects, but it's also a closed deal. So it's being implemented right now. The sale has already happened, and it should be on the road around June or July. I don't want to say anymore. I'm sorry. We have some customers also in Asia and some part of Asia through some of the resellers that we work with. Those are smaller markets, obviously. There is definitely a difference of spending habits between Europe and North America. North American love to spend the money. It's good. And Europe would be a little bit more, how do you say? Conservative. Yes. So we're still working after it, but it's longer sales cycles.
Yeah.
Except on the bike share side, that goes like that.
That's gone well.
What else do we have? Do we have anything?
She just landed another 2,000 unit deal for a European city as well for bike share. So she's really taken that bike share market by storm.
Yeah,
that's fantastic.
More than that.
No. And I can't think of. I think we're doing some trials. Again, it's not always easy to sell in some markets that we don't have or feed in through a reseller. So that's why maybe and the network is not all over the world. So if you look at the LTM maps, Honduras and things like that don't have it. So Latin America is a bit more difficult of a market to penetrate. Mexico is good. It's covered by AT&T, but we really depend on the network. And then some other countries. So we've had a few possibilities, sales inquiries in Saudi Arabia, but same thing, like there's no network. It's a fairly large market. So there's still a lot of growth in this market. Like we're still, the market is largely untapped. We will see huge development. And what Owen forgot to mention, he got us into a group with the GSMA. So we're now actually members of the GSMA, which is the body that sort of set the guidelines for the networks. And you didn't talk about NTN and
all the stuff. I wasn't really thinking straight. There are other R&D initiatives that we think are fairly powerful outside of the new products that we're developing, and has to do with what are called non-terrestrial networks, Paul. These are satellite-based communications, and you might hear words like LTE over satellite. And so the real interesting thing about these satellite-based solutions is it uses the same cellular modem that's currently in our device. So there's no additional cost to add satellite modules, which typically come in at a few $100. So it hits a lot of requirements, especially in Canada. You have brown areas where you just don't have network coverage. Margaux talked about some countries that don't have network coverage, and so it can instantly fall back to satellite-based communications without a corresponding increase in capital costs. There is a little bit of an increase in the data that goes over these networks, but it's another game changer.
It's a unicorn.
It really is. So.
It's a white paper just about to come out. The committee just finalized it, I think, a few weeks ago. If you head to the GSMA website, GSMA again is one of the benchmark for all the IoT markets. And look at NTN white paper. You should look at some stuff on there. Keywords like I think red cap is another one, although it's not necessarily something we're looking at. I don't even know what it means for sure. But there is, as I was saying earlier, it's still a young technology that is evolving. Like it's only been 4 years, 5 years, somewhere around that. It's still a baby. So as you see it progress, there is a lot of things that we can do, especially with the geniuses that are in the office.
Amazing. Yeah. I mean, it's lots on the go. I love it. I mean, so many new different directions that you can take the business, but all on the back of a solid foundation. Looking forward into 2024, what do you think are the catalysts that we should pay the most attention
to? Continue adoption of the new version of the products that we've just rolled out. Continue expansion of top line and bottom line performance. I mean, it's I think if you look at our history on catalyst type press releases, Paul, we're woefully pitiful. So we try and get people to focus on our financial results. That's that's all we got. And they're going in the right direction. So Rajiv does a great job with the accounting department. We don't have aged receivables. We don't have obsolete inventory. He just keeps us on a real tight ship. And one of the things that and this is kind of getting into the weeds and maybe not relevant for this discussion, but our auditors were being audited by CPAC, which is the Canadian Professional Accounting Standards. And we were lucky enough to be one of the files they picked to oversee the audit of our auditors. So we came through with flying colors and didn't have any sort of delays, nothing. I didn't even get called into a meeting. So there's a lot of really good work going on behind the scenes that we don't promote, but it's all going to improve results for us going forward. So keep an eye on the quarterlies, and every once in a while we'll pull out a press release that is more sort of catalyst related, but like to try and keep those as a surprise.
We've got this saying lately: "Boring is beautiful." You guys are making it easy. This is good.
I've never been so happy to be called boring.
Exactly. Yeah. Exactly. Well, listen. Last thing, is there anything we missed, or is a key catalyst? Key key takeaway you want to make sure everybody wants?
Yeah. So I don't mean to beat a dead horse with this. Q1's coming out in 3 weeks, 3 to 4 weeks. So keep an eye on that. Q, another 3 months after that. Just because you get a little bit longer to file your year-end stuff, Q1 comes out right away.
Yep.
So we're kind of in back-to-back financial season. Please stay tuned for those. We'd love to come back and update the group, even though it's relatively quick until Q1 comes out. But we're expecting to show continued progress on all fronts, guys.
Right on. Well, listen, we'd be happy to have you back. So we'll look forward to it in a few weeks. We've been speaking with both Owen Moore and Margaux Berry, BeWhere, BEW on the Venture Exchange. Guys, always good to see you, and certainly wish you continued success. Thanks for coming today.
Thank you.
Thank you. Have a great day.
You got it. Bye-bye.